Today we've got federal income tax, and this is going to start chapter 2 of our book, but I'm pretty much taking everything from the book for you, so you don't really have to worry too much about that. All right, so federal income tax. So all federal income tax is basically, so there's a federal income tax and a state income tax, and they both pretty much do the same thing, except one is at a national level, which is federal, one's at a state level. We'll get into state level next section. But the first section is federal income tax, and it is just by law, employers have to withhold a certain amount for federal income tax, and the IRS provides tables that show how much money to withhold, and I'm going to send you those tables because those will help you, because there's two different methods of doing this. One is just using the weekly payroll table, and then one's using the percentage method. So we'll do both of those, but I'll send you both of those tables, or they'll be attached with this homework. So then your withholding allowances, that's just, so it depends on your income, your marital status, and your withholding allowance. That's the amount that's withheld, depends on that. And you may claim yourself as an allowance, and then if you're married, you can claim your spouse, and you can claim additional allowance for others you support, like children or anything like that. And then, okay, so the weekly payroll table is just, you'll basically take a graph. So I'll switch over to that so you can see it. So like if you're single, hang on, let me make it where I can edit this. All right, so if you're single, you would look at this bracket, and let's say you made, I don't know, $100 a week. I can actually make this bigger. So let's say you made $100 a week, and you claim one person. So that means you actually wouldn't have any money taken out. Let's say that let's go down a little further. Let's say you make $400 a week, and you claim two people. So that'd be this third column. So let's go all the way down to 400, and it should be right here. So that just means you're withholding $26. It's pretty easy. All you got to do is use these tables. And then the second one is the percentage method. And the way that this is calculated is you use, so companies take like a percentage of your pay, and they use that to calculate how much withholding you'll have. So the first step you have to do is find your allowance amount. So that's going to be the number of allowances times $63.46, because that's the number. That's the number of each allowance that you have. So if you have two, you're going to take 2 and multiply it by that, and that will be your allowance amount. So then you take, the second step is to find your taxable wages. So that's going to be your gross pay minus that allowance amount that you found. And then the last step is to take that taxable wage table that I'm going to give you, and we're going to use that to compute it. And then that will be the final amount withheld for the federal income tax. So let's do these two examples. Actually, I think I've got 2 of each. Yeah. All right. And this first part's pretty easy. So it just says, use the federal income tax weekly payroll table to find what the amount is. So first example is Dan is married and he claims one allowance. So when we go to this chart, we're going to look for married. And yeah, we want to go to the married section. So we're either going to use one of these two. And let's see how much he made. It says he claims one, and he makes $390.50. All right, so let's find $390. So $390 is right here. All right, so we've got $390 right here, and it's $390.50. So as long as it's in between that $390 and $400, that's our range. And it says he only claims one. So we're going to look at the second column. So 390. Let's go over to the second column. So that's just $18. So that's just how easy it is. All you got to do is say, okay, $18. It's that simple when you're using the graph. And then it says Angie is single, so we're going to go over and we're going to use the single side of things. It says she has 2 allowances and earns $435.95. Okay, so let's go down to $435. So let me clear this off. So we're going to look at $430 and $440 because, or that column, because it's in between $430 and $440. Usually it goes in increments of 10 like that. So since it's $435.95, we're just going to go in between those two, and so that's the column we'll use for that. And she claims 2 allowances, so that's going to be this right here. I'll get rid of this stuff. So that's going to be the third column. So all we need to do is count over to the third column. And that would be $31. So it's just $31. That's all you've got to do for when you're using the weekly payroll table, not the percentage method. This is the first method, which is far easier. All right, now let's look at the last two. This one's a little bit more complicated, but it shouldn't be too bad. All right, so for the first part, if you go back up here, first thing we need to do is find our allowance amount, and that's just the number of allowances times $63.46. That's the first thing we're going to do. So step 1, we're going to take our allowances times $63.46, and that's going to give me 2 times $63.46. That's going to give me $126.92. Step 2 is going to be to take that, subtract it by our gross pay to get our total wages. So if he earns $293.23, we're going to subtract that by our allowance amount. And this will give us our taxable income. So this is how much money is actually being able to be taxed. So 293.23 minus 126.92. That's going to give me 166.31. Okay, so now we take that amount and we are going to use the table that is our percentage method chart to figure out how to compute our final withholding. So this is going to be step 3. Okay. So our total withheld was 166.31. So we are going to look at, this chart says over 51. Hang on, let me make it where I can edit it. So this chart tells you where to look at. So if it's over $51, but not over 196 or 195, then that means 166 would fit into that range. So the amounts taxed is going to be whatever this amount is. So in this case, it's $0 plus 10% of anything over 51. So to find what it is, we're going to take $0 plus anything, 10% of anything over $51. So that's going to be 0.10 as a decimal times, and then we're going to take 166.31 and subtract it by 51. That'll tell us the difference there. So that'll tell us everything that exceeds that. So that's going to be 166.31 minus 51. So that means $115 is what's going to actually be taxed, and 10% of that will be taxed. So that's what it would look like. And then we just compute that. So that's going to equal, since this number was 0, we don't have to worry about that. So all we have to do is do 0.01 or 0.1 times 115.31. And that's going to be $11.53. So that's how much actual federal tax money would be withheld. So to do those, there's just 3 steps. First thing you've got to do is find the allowance amount. Then you want to find your taxable wages. Then you use that with this graph to figure out if it's going to be 1440 plus the 15% over everything plus that, or it's going to be the 8190, or it's going to be the 0. So that's how you would use that. And we'll do more examples of this in class. But that will be all for this video.